Hello, how much profit to target when swing trading using long option long swing trading strategy? I will say around 10% is a good profit margin to target. So when you purchase the stock, and we can just use COR for instance, and while it's opening for us, we can come back to our summary here. When you purchase the stock at a low uptrend line or support line, when the stock is going to climb another mountain, depending on the type of stocks you are purchasing, in this instance, they are upward stocks, large cap stocks, but upward stocks. Therefore, their support lines are upward. When you are connecting higher lows, it will be oblique and upward trend. When you purchase it at a low trend line, you will be able to wait for a while before you sell it. But again, it will depend on what you are comfortable with. Therefore, 10% is a good one to target, or the next high, depending on which one comes first, or which one you are comfortable with. If the next high, depending on where you purchase the stocks, you know that you'll have more highs to come. You purchase it at the valley of the mountain. When the stocks start climbing up, you know that based on previous mountain that the price created on the chart, you know that you'll have multiple highs before you reach the peak. You could decide to wait, to ride it for a little bit before you sell it and lock in that profit. It's not about maximizing your profit, have the most profit possible, and not leaving anything on the table. Is just about locking in profits. We are not trying to be the best at swing trading. We are not trying to be the best at making profit from each trade we take, but we are just trying to make money and lock in our money. So buying it at the right spot and selling it after lock in some profits. So I'm having an issue with the things, but with COR, for instance, this week that ended, we have about $200 profit there, which is about 3% return, but pretty much 10% with how much we pay for it. 10% is a little bit close to 600. So having that profit, we could ask ourselves, do we want to sell it and lock it in, or do we want to wait? So you can ask yourself that question and just train yourself to wait a little longer. And we can see another example as well, but it'll take some practice, and we are still learning to see what profit margin we are comfortable with. With the long term strategy, we are not thinking about buying it and selling it shortly after, a few days later, but we are thinking about riding the mountain, left side of the mountain, climbing up for a while and sell it. And trading large caps, upward large cap, they do reach high often or frequently. So this is another one as well that is closer to 10%. That, for things like that, it's good to pause and ask yourself, based on what side of the mountain you purchase the stock, you got in, you enter the trade, are you comfortable with that profit to just lock it in? Or do you think you bought it at the right side of the mountain. When I say right side, a mountain has a side, a left side going up, and the right side going down, depending on what side you are set. If the depending on where you are for the mountain is front of you, the left side is climbing up, the right side is going down, is the side to climb down. So depending on where you bought it, you might decide that, you know what, this profit is good enough, let's set it and lock it in. Or you might say, you know what, I bought it right at the base of the mountain, so I could wait for the cost to continue for a while before you sell it. Therefore, yeah, that 10% or even more than that 10% could be an option. There is another instance, and we purchased those one we highlighted in kind of pink color or peach color. I'm not sure, I'm not very good with colors, but we purchased them in 2025. But this one, NVDA, is another example where right now we have about 2% return on it. But if we go a little bit down a little bit, if we go to, you know, a few days prior, we could see the change in that as well. And at the beginning of the year, it was higher, and few days prior, end of December, it was like 900 something. We are aiming for 1,000, and when it was 900, I asked myself if I should sell it. But I just felt like it could continue to, it could climb more shorter mountain. It has some way to go, so I didn't sell it. And shortly, few days later, it dropped, and it dropped again. And I think at some point it was negative. There was a week that it was negative, and as you can see here, it went down to the point that it was negative. But then, you know, continue to, because those are, you know, a specific day of the week, it will fluctuate during the week, but it start going up from 200 negative to 100 negative, and then went to 100 positive, and went to, you know, 200 positive. If we pick this one, for instance, I'm not sure what week we purchase it anymore, and we didn't purchase it within the week of 11 of January, but we purchased it in the week of 17. So you can see that at some point it has 300 profit there, which is about 5%. And then the following week, it went up a little more, and then the week that ended, you know, on January 24th, we see the, you know, the profit that was there as well. So it's not really a good set rule, but it's just a guide to just guide you, for you to have a reference point to work with, and you can just make it flexible depending on the stocks you are trading, the experience you have with it before, if you purchase it before, how it behaves, how you are comfortable letting it ride its course for a little longer, or depending on where you bought it. If you think you bought it close to the tip of the mountain, yeah, whether it reached that 10% or not, you can, you know, sell it and get out. So it all depends on where you think you bought it, and if you are confident that it's going to continue going up for a while before it will start pulling back, you know, to the trend line you bought it for. The goal is the trend line you bought it for, you want to sell it before it start going back to that trend line. But just know that along the way, it will go up, it will go down, it will go up, it will go down. But now going down all the way to the trend line you purchase it at. Once it start climbing the mountain, it's going to continue doing those zigzag. So, but you just want to make sure you sell it before it pulls back to the trend line you bought it at. And if you are wondering what trend line, and before we talk about what trend line to buy at, it's okay to start small. So based on, that 10% is a guidance to help you that even if you buy one share, you know that based on how much you pay for it, once the price reach is 10% higher than what you pay for it, you have 10% profits. You can just sell it and lock in that profit and wait for that to come back again to the trend line before you buy again, or have that money to be able to buy another stock that is well positioned for you to buy. So having a percentage like that could be a reference point that you can apply to stocks that you are purchasing, regardless of how much you are spending on it or how many shares you are buying, if you are working with percentage. But again, your experience you are having with it will determine will help you decide the percentage that you like to work with. It might be higher than 10%, it might be lower than 10%. It could even vary based on where you enter the trade in the whole course, because it's making mountain depending on where you think you enter the trade. If you think you enter the trade far late, you might decide to use just a smaller profit so that you can get out of the trade before it start going down again. If you are thinking, you are wondering where to buy the trend line, the best place to buy is at the valley of the mountain. Is the lowest point when you are buying it on the trend line. And if you are buying it at the valley, when it start going up, it is right at the beginning at the base of the mountain, at the beginning of when it start trending up. Therefore, you can ride that course for a while before you sell. And just trace your support line with this long uptrend and swing trading strategy. You can trace your support line or uptrend lines and choose target few of them that are long enough that you want to wait for the price to come down to either one of those. And once you have a confirmation that it's going to use that trend line as a support to start going up, meaning it's going to make few higher lows around that trend line to give you confirmation that it's done going down. Once you have those few higher lows around that trend line, you can buy at the first or second green bar that follow a pullback. So when depending on where you enter the trade, the cost, you can decide if you want to wait for that 10% to return before you get out, if you want to wait for the next high before you get out, or if you prefer to have to continue the course to stay in the trade for multiple highs to be reached before you get out, depending on how many highs that you think it did in the past at that same area of the mountain before it reached the peak and start dropping. So just by comparing the previous mountain that it created before it started a new one can help you decide. It can help you get. So it's not really a straight formula that I'm using, but I'm just observing the chart, see what the price is doing, and the more the price is moving, the more I'm getting a clearer view of the pattern that the price is drawing. Does that make sense? And it's good to compare that to previous part of the chart as well. So using maximum daily chart can help you have a wide gap, multiple years on your screen, that you can make that comparison to see if you can see a big picture of the pattern that the price is drawing. If you can decipher the mountain that is drawing, if it tends to do taller mountain or wider mountain before touching base with the trend line that you like to buy on, and you can adjust the trend lines as is the pattern is continuing, the price is moving day after day. You can adjust your trend line as well, and you might even decide that the one you trace were too low is less likely to come down to that, especially if it's using previous resistance line as a support line, or previous peak of the mountain, previous mountain peak as a support line. Those peak will be resistance line. But if it is resting on it and start going up without touching the trend line that you trace, they are just those things that you can consider. I don't use indicator, just the chart, the price bar, the color of the price bar, green bar, red bar. Green bar means the price went up that day, and red bar means the price dropped that day. So comparing when the market open in the morning, the price at that point, and the price in evening when the market closed. So if the evening price is lower than the morning price, the price dropped that day. If the evening price is higher than the morning price, the price went up that day. So, but yeah, and just observe, start small, and take note of what you are experiencing, and whenever possible, if you can even export your account position, and just like the way I show you, you can just see the evolution. You can see that on the chart, because when you purchase it, you can put an arrow on the underneath the price bar on the chart where you purchase it, and you can just see how the price continue from there day after day. You trade on a daily chart, or you can swing trade on a daily chart. And additionally, if you want, you can export your account position with the weekly or daily to just see, how a particular stock fluctuates week after week or day after day, just to allow you to study, some of those stocks that pique your attention, to study them and just trying to understand what they are trying to do. But having a stock watch list that you trade from every time, and times to times take out the stocks that you didn't have a good experience with, and add a few more that you come across and you came across and you like, and until you have a curated watch list of stocks that you like to keep as watch list to trade from, by analyzing the chart on a daily basis, or mostly often you'll get yourself familiar with the pattern, the chart, and at least that's the goal. And I don't think you'll have a formula that works for you right from the bat, but by trying over time, you'll see what works for you, because what works for you could be different from what works for me, depending on your risk tolerance, your personality type. You might aim for a different profit target, even if you are using the same type of strategy. Thank you. We thank you very much for your time. We thank you very much for all your comments. We thank you very much for watching our videos. And we thank you very much, you all that subscribe to our channel. I'm Afiavi Liberman, host of Liberman Consulting L.L.C YouTube channel and in sub.com our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Thank you.